Hi, I'm Jeff Steinbrenner, and this is the Banker's Rules. Today we're going to go over step 2 of setting up your bank, safety. We're going to talk about should you get an LLC. We're also going to be covering getting collateral for your loans to get the safest amount possible. And you want to make sure that you make safe loans and follow your underwriting criteria. If they're interested in that, stay tuned. Coming up. Alright, first of all, what we want to cover is should you start an LLC for your bank. If you're going to be lending money out to others, you want to make sure you're protected and your other things, your other assets are protected. Alright, first of all, safety tip number 1, should you set up an LLC? If you're going to be lending your money out to others, you want to make sure that you're protected in case they try to come back and sue you, or they can't come and get your stuff. They can't take your house if it's in your name. So any of your private property that you may own or things you own will be protected in the LLC. So if they try to come after you, sue you, they got to come after and sue your whole LLC liability. I'm not going into depth with this. These are just suggestions. This is entertainment, not financial advice. Now on to step 2 of this is getting collateral. Now you want to make sure that you've got collateralized loans. That is, that you have something tangible backing up what you get. Biggest suggestion is getting 150% of what you're going to be loaning out. So if you're loaning out $1,000, you're going to want, $1,000 cell phone as collateral. You want that they own, not that they're making payments on. They got to own this stuff free and clear. You don't want to ask for, if it's $1,000 loan, you could, if they have a paid off vehicle and it's worth 10 grand, it's a bit over collateralized. But you want to try to get it within that 150% range. Now if they're willing to do that, that's fine. That's between you and them and your collateral, but try to keep it within the figures that you're loaning. If you're loaning 5 grand, you want to make sure you can get collateral for that. There could be creative ways of doing it. You can get multiple things, but have a collateral sheet of what they have, what they're willing to give you in return. And if you have long-term loans more than a year, you want to make sure that these values aren't going to drop drastically as time goes on. So you want to make sure you can get your money back, or they can sell these things or give you these things and you can sell them if need be to get your collateral back, to get all your money back. So, and like I said, I like to keep these short, so we're going to move on. You create your own underwriting criteria, and this criteria allows you to be able to look and quickly know if the loan that you set, if you're set to, you want to loan out money to someone to buy a car, the collateral that you want is to cash ratio. So if you said, well, I'm only lending 60% of that car, and they got to come up with the other percentage of the car plus tax and title, that's fine. That's what you need to stick with. Don't change it. You need to stick with what your criteria is so that you can make safer and better loans in the future. So if these tips are helpful in any way, if you need me to elaborate or go more into depth, please let me know in the comments below. Please like and subscribe. And if you look for more content like this, and you want me to do different things in the videos or elaborate more, please let me know in those comments. I would appreciate it. And thanks, and have a blessed day.